Thanks for tuning into Talking Point. I'm your host, Niraj Shah. Our guest today, you could argue that not just in the recent past, but otherwise, his performances have been great. But the recent past would make some people believe that does he have the Midas touch? Because his prophecies around what's happening in the market near term and his positioning as well, self-proclaimed positioning about what he's doing with his portfolio has turned out to be very, very spot on. And the question, or the big question that we're asking our guest, Siddhartha Bhaiya, today, is this, which will come up on the wall right now. That's the big question. And it's something that you should never ask people, but we'll still ask, will markets continue to correct? Siddhartha.
You know, we always keep on saying, Niraj, let's not predict the markets. And we always try and, do that.
Yeah.
So will the markets continue to correct? Look, you're in the markets, you're here to take a call, and sometimes you go right and sometimes you go wrong. I think the way I look at it, Niraj, we had a fantastic 4 years, right? March 2020, we talked about, the government doing, globally the government's doing quantitative easing. This was that a lot of this money was going to come to the stock markets. And we've had a fantastic 4 years over the last, the small cap index has gone up 400% in the last 4 years. We see a lot of excesses in the markets right now. So we are cautious. We are cautious, particularly in the small cap index and the SME index. We see a lot of excesses. We're seeing valuations like never before. So my sense is, yes, we're going to see a correction, a big correction. Is this the end of the bull market? If you ask me, I'll stick my neck out here and say, maybe there's a 60-70% probability that we are past the peak as far as the bull market is concerned.
Wow, okay, I'm going to challenge that as well a little bit. But
yes.
First, let's try and talk about some of the things that you said. You mentioned this in this tweet on March 13th, right, which is yesterday, that we had a fantastic 4-year bull market. There was greed like never before. The correction of the bear market doesn't get over in a week. Are you calling this the start of a bear market?
As I said, I'd put a 60 to 70% probability that we've probably seen the top of the bull market. As I said, I can go wrong. And you look at history, right? And what is it that you see? I read a lot of history, and what is it that you see? Bull markets typically will peak on good news and very good news, right? You will see, there's a saying that once your shoe shine boy says that, buy stocks, it is the top of the markets. And I'm hearing horror stories all around of people have never done anything in the stock markets, wanting to come and invest in stock markets. You're seeing so much as far as options trading is concerned in the markets.
Yes.
Typically, you see a lot of IPOs coming in this, and we have seen a plethora of IPOs, particularly if you look at the SME space and everything. We are seeing massive amounts of promoter selling like never before. So these are all indications of a bull market, of a roaring bull market. And this is pattern recognition for me. So somewhere I feel that probably we are over the hump as far as the bull market is concerned.
Okay.
I can be wrong.
Of course,
right?
of course.
And I don't want people to take their decisions based on my opinion.
Most certainly, yeah. But we value your opinion, and hence the idea to have you here, right? And particularly in times like these. Some people would counter, Siddharth, that you would worry a lot if you are at the end of the later stage of a valuation cycle, which we certainly are, and maybe we're at a later stage of an economic cycle. It doesn't seem like we're at the later stage of an economic cycle, right? I mean, economic growth looks like to be buoyant, if the RBI is to be believed, 7% FY25 as well, and that will bring about a 10, 12, 15% earnings growth for FY25.
So, as I said, markets will always top out when the economy is at its peak. Right? Any bull market starts with short covering. It never starts with fundamentally good. The bull market started when the lockdown was announced, when fundamentally things were very bad. That was the day when the markets bottomed out. So it was essentially a lot of short covering. Today, everything is, could you have imagined 4 years back, Niraj, in March 2020, when nobody wanted to touch small caps? And today you have the SME index and the small cap index where people are just buying left, right, and center. So I am a little worried. I'll be very honest with you.
Yeah, well, if your tweet on Feb 9 is to be believed, and let's get that up, if your tweet on Feb 9 is to be believed, all the testosterone and the bull will be killed in this ensuing bear market. So you are obviously putting your money where your mouth is, because I know in some sense you also mentioned that you're taking some positions off your portfolio as well. So you're kind of preparing for a very sluggish 2024.
So all I can say is December 2017 we were at 30% cash. And since after that the small cap index fell more than 50-55%. So we are now at 30% cash only for the second time in the last 11 years.
Wow. Is this fear for a particular sect of the market, which is small caps and micro caps, or do you reckon even large caps have issues?
I think large caps, Neeraj, are very well positioned, to be honest with you. But eventually, look, the way it starts is people first in the bull market. The way it starts is people will first invest into mutual funds, large cap mutual funds. Then they'll buy large caps on their own. Then they'll go into mid caps, then into small caps. And eventually, they will start speculating in the SME, which is what we are seeing. So there is going to be a ripple effect. The large caps, according to me, are much better placed than what it is for, the small cap index is quoting at something like 30 times earnings or something. I don't even want to look at what is there in the SME. I don't even look at it, but you can see a froth when the way stock prices are going up. So, as I said, that's my.
What can counter this thesis? Because I know you are a pragmatic person, a realist person. What will make you change your prognosis about the direction of earnings growth and valuation matches at the broader end of the spectrum? Or if I make it as a larger question, what will challenge your thesis of this looking like the start of a bearish phase?
So to be honest with you, Neeraj, this is the first time where I have taken a call on the markets and sold our stocks. Typically, we just kind of tend to ignore the markets and focus on our companies. But what we see are, our companies had record profitability last quarter. We expect a very good March quarter for all our companies as well. So earnings growth, order book, outlook for all our companies is very, very good. The valuations are extended for for a lot of our companies. But as I said, what I see around overall with the IPOs, look, my biggest concern is I focus on what the promoters do. March 2020 and through 2021, you had massive insider buying by the promoters. Massive insider buying. Last 1 year, I barely see any insider purchases. They've been busy offloading their stakes. You have international MNC companies like Whirlpool, like Hyundai, like BAT. They are coming and offloading their stake in the Indian markets. Clearly, those guys understand their business better than what we do. Whirlpool globally quotes at 8-9 times P multiple. In India, it is quoting at 50 P multiple or whatever. Their annual profit, 60,000 people working throughout the year, their annual profit is $500 million. And they just sold 24% stake and made $500 million.
Yeah. Yeah, but historically, Siddhartha, I mean, I'm just saying, for example, a Unilever has always traded at a discount to HUL, Nestle Global to Nestle India. So that is not a new phenomenon, right?
Yes, we've always quoted at a premium, but the premium to a large extent, Neeraj, was limited. What we are seeing is a blowout as far as the premiums are concerned. I'll give you examples. We've started researching international companies. Like Singtel owns a significant chunk in Bharti Airtel. Singtel's market cap is $39 billion. They own $30 billion worth of Bharti Airtel. Right? We're looking at China Mobile. China Mobile's profitability is 15x of Bharti Airtel's. And their market cap is only 2x of Bharti. So there's an 80% valuation differential. You're talking about an 80% valuation differential, which is phenomenal. So we've always quoted at premium for the quality of companies that we have had in the Nifty. Look, there is Nifty, which is very, very high quality companies. And we also have to remember that you have a lot of unscrupulous companies. We have serious corporate governance issues in smaller companies, which we have had in the past. So we're not, this, which people tend to kind of forget in this markets.
Yeah.
So yes, Nifty, as I said, very high quality company. Some of the premium is justified, but not all the premium is justified.
Not all the premium is justified.
And just to counter that point, March 2020, Maruti's market capitalization in India was higher than the market capitalization of Suzuki. And then we all know what happened to Maruti stock for the next 3 years. I think it was March 17 or 18, where Maruti's market cap had gone, when Maruti first touched 10,000 crores, 10,000 rupees. Their market cap had crossed Suzuki, and then I think Maruti did not do well for the next 3 to 4 years after that.
We're talking about some of the things that he's put out. I mean, most of these things would make you know that he's cautious. So actually, let's pull up a series of his tweets that he's done. We've showed you the latest one, which was done on March 13th, and maybe the first one on Feb 9. But if you can get some of the other things that he's put out on Twitter as well. So this is him on March 13. Of course, we saw this. Let's move on to the other one, because he's already spoken about how there is, this is good. So Siddharth, can you explain what you're trying to say with this? Because you're saying that short covering peak on leverage, you believe there is this massive leverage unwinding that is undergoing, and we are underway that?
We saw that yesterday, right? There was a very broad-based sell-off, while the Nifty was down only 1.5%. It felt like the overall markets were down probably for 5% or so.
Yes.
Right? So, as I said, what explains? What explains? It is leverage within the system. So, you have to understand, Niraj, markets are 6 months ahead of the economy. They're always 6 months ahead of the economy. So, this is what we are seeing. Typically, March 2020, there was no fundamental reason for the markets to rally, but there was a lot of short position that got, this, and which we are seeing in some of the global markets as well, which have quoting at 15, 20-year lows, that we are seeing a big rally over there, and it is being attributed to short covering.
Okay, let's try and challenge some of these thoughts as well, Siddharth. We've done a little bit of that, and we'll get a table with numbers out there to make some reference points too. But while we get that table on the screen, here's one more question. What about some of the themes which are necessarily present only at the broader end of the spectrum? They're not present in the large cap space. What do you do if you don't want to if you want to participate in some of the growth themes? They're not present in the large cap space. Earnings growth looks very strong. Valuations may be a bit of a challenge. What do you do in such scenarios?
I would always say, investing is all about the future. So, we've had, if you've read about history, you will realize that in the 90s, a lot of projects were announced. And many of those projects never saw the, light at the end of the tunnel. You look at something like a Dabhol power plant, or so many other power plants. And, SBI was on a bank like SBI was on a big soup because of the Dabhol power plant. So, to me, margin of safety is very, very important. Look, and we bought a lot of these growth themes 4 or 5 years back when the valuation was attractive. And then the future played out, and even we didn't expect that. The way, who would have predicted 4 years back that you're going to see an infrastructure boom like that in our country? So I'll be cautious. I'll be very honest with you. I'll be very, very cautious. Yeah. Look, we've made a lot of good returns for our clients over the last 4 years. They're happy, we are happy. We don't want to pile on any more stress, at a personal level. So taking some chips off the block, and then we'll see, or taking some chips off the table, and then we'll see when we want to re-enter again.
Okay, now, I'm flipping the question now on its head, and that table will show you the extent of the fall, viewers, that has happened in the past. Now, that is not to say that the same thing will happen, but I want to question Siddharth on that thus far, Siddharth, based on the movements that we've seen from the top around Feb, when you put out that first tweet, the last line shows that we are about 12.5% lower on the small caps. Now, the past history has shown, let's keep that table please on the screen. The past history has shown that we've declined anywhere between 24 to 41% as well. Could we go down that much in the current fall as well at the smaller end of the spectrum?
So, Niraj, you can either predict the direction or you can predict the extent. You can't predict both.
Yeah, I'm not asking for an exact number. Sorry, yes. I'm not asking you for an exact number. But
you're going to have cascading effect. You're going to have cascading effect. I've never seen retail participation, at least not even in 2007-8, to the extent that I'm seeing in the markets right now. And the biggest change has been your apps, which have made transacting very easy. Earlier, when I started my career, you had to call up your broker. You were a small guy. Your call got picked up only half an hour after the markets opened. Then you put a trade, the price didn't come, then to do one transaction would probably take one whole day. Today at 9:15, at a click of a button, you can do the transaction. It has made life very convenient for people, but as I said, that convenience is going to come at a cost. So I've never seen retail participation at the rate at which, and we all know, as I said, there is 400, 500 years of history. And don't get me wrong, I was not born with a silver spoon. I started off as a retail guy. So the stock market also gives you an opportunity to transcend that barrier from being a retail, but we all know history, 400, 500 years of stock, that people eventually, a majority of the people end up losing money in the stock markets.
That's true. Okay, so no, we are not predicting here, but you believe that the extent of the fall need not be contained right now. There could be more exaggerated selling.
And it is not going to be a one-way.
Yeah,
see, bull market happens over 4 or 5 years. A bear market has to play out over 18 months or 24 months. So it is not going to be a one-way decline where everything gets corrected. No, it's going to be declines. There are going to be false rallies. And you might again see this. And at the same time, you're going to see much more sell-off in companies which are not part of the indices. So the Nifty over a period of time will go higher. The small cap index, the mid cap index will go higher because there is survivorship bias over there. But a lot of companies today which got listed in the last 2-3 years, I see majority of the promoters are unscrupulous over there. Those are the companies which are eventually going to delist.
Wow. Okay. Interesting. So within this construct, Siddharth, where is it that fundamentally you are constructed? You are 30% cash, but which means you are 70% still invested, wherein you believe that chances of these companies and these stocks doing well are higher. So what are these businesses? What are these themes? I mean, I'm not asking for stocks. Essentially asking for the nature of the business.
Yeah. So again, as I said, Niraj, we've been invested in the stocks for the last 4 or 5 years. As a fund manager, a 30% cash is a very, very aggressive bet that you are taking. Means with very few, again, only 2 times in the last 11 years that I've been sitting on cash. So, as I said, while we're sitting with a lot of margin of safety as far as this is concerned, and like, do you want to call it a personal bias? But our stocks are showing good order book growth, good good visibility, but we are cautious. We're not buying anything more. Our buying prices are much lower, so we're okay holding on to some of our infrastructure names or cap goods name, or manufacturing names.
Got it. They necessarily have to be available at a decent valuation, right, for them to fall in your funnel.
Yes.
So you are not the kinds who's bought into a capital goods stock, which is MNC, which has delivered fabulous performance but trading at 70, 80 times. You kind of avoided that completely.
Yes. So most of our names would be yes. There was a time, Niraj, in 2009, when all these MNC stocks were available at 10, 12 P multiples. I can share the list with you. From KSB pumps to, SKF bearings to FAC bearings, they were all available with 20, 25% net cash on the balance sheet and at 10 to 12 P multiple. So cycles, those companies will also hopefully at some point in time, come back to those levels, or if they don't, you'll always find something else.
Okay. May I ask you, Siddharth, last couple of questions. May I ask you that within this landscape, are there opportunities wherein, and I'm not asking for names here again, but while you may be overall not buying, but what is it that you would keep on your radar? Because the opportunities may be real and they might be performing well. Sure, your buying decision will depend on a lot of things, including the sentiment around the market. But where are these pockets?
So, Niraj, I'll be honest with you, right? We kind of, as part of our research, we also research or broadly look at the valuation parameters for international companies, for companies which are in similar businesses. And right now, we find opportunities outside India in some of these names at a significant discount. You were able to buy consumption companies in some of the Eastern Asian countries with net cash on the balance sheet at single-digit P multiples. These are serious cash flows. So, as I said, and then if there is a global investor, eventually, they're going to see that, and money is going to flow. And money flow and cycles tend to happen gradually and slowly over a period of time. So I find a lot of opportunities in the international markets right now, to be honest with you, as compared to the Indian markets.
Got it. My final question, Siddharth. Usually, I heard you say that bear markets take about 12 to 18 months to play out. It's not one way, so on and so forth. It's also true that these days cycles have gotten a bit compressed. So could it be possible that with the tailwinds that India has around growth relative to the rest of the world, that a cycle which is bearish in nature or is a bear market could be swift instead of it being a prolonged one?
So how do I judge history? I judge history over a period of 400, 500 years for this. I would not look at the last 7, 8, 10 years as barometer for the stock market behavior. And look, we've barely seen a bear market since 2009. So majority of the people who have come post that have never seen what a serious drawdown is. Maybe bar say 2019, 2020. So, as I said, I'll just, I learn from history, and I tend to kind of, see how the history does tend to repeat itself.
Got it. Leave us with maybe a book recommendation. Since you read so much, what is a really good one that you've read recently?
I think I read, a very good book, and particularly for people who are into startup investing, who are into fintech, edtech, health tech, whatever. I just read this book, Pyramid of Lies. It's about a UK hedge fund, or a UK unicorn, which got a valuation of $3.5 billion or something within 4 or 5 years, where General Atlantic and SoftBank came in and pumped money, and it went belly up, and it was David Cameron who was on the board. So it's a very interesting read, and you're going to see, unfortunately, nobody is going to write a book on Byju's like that in India, but it is the Indian equivalent of Byju's, and you'll see a lot more like that in the unlisted space in India.
Siddhartha Bhaiya, so good talking to you. Thank you so much for taking the time out and being with us today.
Thank you. Thanks a lot, Niraj.
And the pleasure was entirely ours. And viewers, thanks for tuning into this fascinating episode of The Talking Point.